नमस्ते दोस्तों एंड वेलकम बैक टू द चैनल। आज हम बात करेंगे कि कैसे आप एक सक्सेसफुल ट्रेडर बन सकते हैं। Look, trading is not a get-rich-quick scheme. It takes hard work, dedication, and a willingness to learn from your mistakes. But if you're willing to put in the effort, the rewards can be huge. In this video, I'm going to share with you the 10 secrets that changed my trading career, and they can change yours too. So grab your chai, get comfortable, and let's get started. Before you even think about putting your hard-earned money on the line, you need to understand the basics of trading. This means understanding what trading is, buying and selling assets with the goal of making a profit. You need to know the different markets you can trade in, like stocks, forex, and crypto. And you need to understand the different order types, like market orders, limit orders, and stop-loss orders. Think of it like building a house. You can't just start slapping on bricks without a solid foundation, right? Same thing with trading. Now, the good news is there are tons of resources available to help you learn the basics. There are amazing books, YouTube channels, some of my favorites by the way, and even free simulation platforms where you can practice trading with virtual money. Take your time, do your research, and don't be afraid to ask questions. Remember, every successful trader was once a beginner. Trading isn't a one-size-fits-all game. There are different styles to suit different personalities and lifestyles. Do you have the nerves of steel for day trading, getting in and out of trades within the same day? Or maybe you're more of a swing trader, riding those medium-term trends? Or perhaps you prefer the long game, holding positions for weeks, months, or even years as a position trader. Each style has its own pros and cons, and what works for one person might be a disaster for another. That's why it's so important to choose a style that aligns with your personality, your schedule, and your risk tolerance. If you're someone who thrives on fast-paced action, day trading might be a good fit. But if you're more laid back and prefer a hands-off approach, swing trading or position trading might be better suited for you. The key is to experiment and find what feels right for you. Don't be afraid to try different styles until you find one that clicks. Now that you understand the basics and you've chosen a trading style, it's time to develop a trading strategy. This is your roadmap to success. It's how you plan to make money in the market. There are countless strategies out there, but some of the most popular and effective ones include trend following, breakout trading, and reversal trading. Trend following is all about identifying and riding the momentum of a stock. Breakout trading involves buying when a stock breaks through a key resistance level. And reversal trading is about spotting potential trend reversals and profiting from the change in direction. To develop a winning strategy, you need to learn the basics of technical analysis. This involves studying charts, understanding candlestick patterns, and using indicators like the RSI and MACD. These tools can help you identify trends, spot potential buy and sell signals, and make more informed trading decisions. Remember, a trading strategy isn't something you just pick up overnight. It takes time to learn, practice, and refine. Listen up, because this is crucial. Risk management is not sexy, but it is the single most important factor in your trading success. Even the best traders in the world have losing trades. It's just part of the game. The difference between a successful trader and an unsuccessful one is how they manage their risk. The golden rule of risk management is to never risk more than 1 to 2% of your trading capital on any single trade. That's right, even if you're 100% sure a trade is going to be a winner, you never risk more than 1 to 2%. Why? Because the market is unpredictable, and even the best traders can be wrong. By limiting your risk, you protect yourself from blowing up your account on a few bad trades. Another key aspect of risk management is using stop-loss orders. These are orders that automatically sell your position if the price drops to a certain level, limiting your potential losses. And finally, diversification is your best friend. Don't put all your eggs in one basket. Instead, spread your risk by trading different assets and markets. Trading is a roller coaster of emotions. You'll experience the thrill of victory and the agony of defeat, sometimes in the same day. And if you let your emotions get the best of you, you're doomed to fail. Fear, greed, and hope are your worst enemies in trading. One of the biggest mistakes new traders make is revenge trading. This is when you try to make up for losses by trading more aggressively, which usually just leads to even bigger losses. Another common mistake is overtrading, taking too many trades without proper analysis or risk management. This is often driven by greed or the fear of missing out. The key to mastering your emotions is to have a trading plan and stick to it, no matter what. Don't let your emotions dictate your decisions. Keep a trading journal and note down your emotions after each trade. This will help you identify your emotional triggers and develop strategies to manage them. You wouldn't believe how many people jump into trading with real money without ever testing their strategies. That's like driving a car without a license. Before you risk a single rupee, you need to backtest your strategies on historical data. This means going back in time and seeing how your strategy would have performed in different market conditions. And the best part is, there are tons of tools available to help you backtest, like TradingView, MetaTrader, and Thinkorswim. These platforms allow you to access historical data, test different indicators, and even automate your trading strategies. Once you've backtested your strategy and are confident in its potential, it's time to practice with a demo account. Almost every brokerage offers demo accounts where you can trade with virtual money in real market conditions. This is invaluable experience because it allows you to get a feel for the market, test your strategy in a live environment, and build your confidence without risking any real money. In this digital age, having the right tools can make or break your trading success. A reliable charting platform is essential for analyzing charts, identifying trends, and spotting potential trading opportunities. You'll also need a good news feed to stay up to date on market-moving events and economic data releases. And of course, you'll need a reputable brokerage account with low fees, a user-friendly platform, and access to the markets you want to trade. Don't be afraid to invest in quality tools. They might seem expensive at first, but they'll pay for themselves many times over in the long run by helping you make better trading decisions and avoid costly mistakes. The market is constantly evolving, which means you need to evolve with it. Never stop learning, never stop adapting. One of the best ways to stay ahead of the curve is to follow other successful traders, mentors, or YouTube educators. Read books, attend webinars, and join online communities. And don't be afraid to learn from your mistakes. Every trade, win or lose, is a learning opportunity. Finally, remember to take breaks and avoid burnout. Trading can be mentally and emotionally demanding, so it's important to step away from the charts and recharge your batteries. Some of my favorite books that have helped me become a better trader are Trading in the Zone by Mark Douglas and Technical Analysis of the Financial Markets by John Murphy. I highly recommend checking them out. Think of your trading plan as your rulebook for success. It's a written document that outlines your trading goals, your risk management rules, and your strategy for entering and exiting trades. Your trading plan should include your trading goals. What do you want to achieve through trading? Your risk management rules. What is your maximum risk per trade? Where will you set your stop-loss orders? Your entry and exit strategy. What criteria will you use to enter and exit trades? Your trading routine. When will you trade? How long will you spend analyzing the markets each day? Having a written trading plan helps you stay disciplined, avoid emotional decisions, and track your progress over time. Trading can be a lonely endeavor, but it doesn't have to be. Joining a trading community or finding a mentor can provide invaluable support, guidance, and accountability. A good trading community can offer a platform to share trading ideas and get feedback from experienced traders. A supportive environment to ask questions and learn from others' mistakes. Motivation and accountability to stay focused on your trading goals. When looking for a trading community, be wary of hype-driven signal groups that promise unrealistic returns. Look for communities that focus on education, risk management, and long-term growth. And finally, having a mentor can be a game changer. A mentor is an experienced trader who can provide personalized guidance, share their insights, and help you navigate the ups and downs of the market. So there you have it, my friends, the 10 secrets to becoming a successful trader. Remember, trading is a journey, not a destination. It takes time, effort, and a willingness to learn and adapt. If you found this video helpful, please give a thumbs up and subscribe to the channel for more trading tips and strategies. And don't forget to hit the notification bell so you don't miss any future uploads. Now get out there, put in the work, and start building your trading success story. Happy trading!